So let's begin today's webcast. We are going to start with a few opening remarks. And the first one will feature Dr. Jochen Biedermann, the Managing Director of World Alliance of International Finance Centers. Jochen's talk will be followed by Jayant Narayan, who is the lead of AI and machine learning technology policy at World Economic Forum. And finally, concluding with John Ashley, the General Manager of Financial Services Industry at NVIDIA. Over to you now, Jochen.
Hello, everybody. My name is Jochen Biedermann. I'm the Managing Director of the World Alliance of International Financial Centers. The World Alliance is a non-profit association comprising 20 leading international financial centers across 4 continents. Our members are city governments, public-private partnerships, and similar institutions developing and promoting their financial centers. We organize a collaboration between our members and the exchange of best practices. Let me introduce you the topic for today, which is artificial intelligence in finance. Today, we focus on Europe after we started our new webinar series a month ago with a focus on North America. Artificial intelligence is impacting us in many industries, but in particular in the financial industry. Our members operate large pools of talents in artificial intelligence, and we see more and more use cases of artificial intelligence in the financial industry in general. At the World Alliance, we foster discussion on the future of financial centers and the financial industry globally. Therefore, I'm very much delighted to see so many experts on artificial intelligence from Europe, and I'm very much looking forward to the discussion. Last but not least, let me thank our 2 partners, the World Economic Forum and NVIDIA, for making this webinar possible. Thank you very much for joining.
Good morning, good afternoon, good evening, everyone. A very warm welcome to the webinar. My name is Jayant. I am part of the World Economic Forum's Artificial Intelligence and Machine Learning team, and I co-manage our Global AI Action Alliance, which is a platform for accelerating the benefits of AI while mitigating its risks. The World Economic Forum has been working on new and emerging technologies for a very long time, but we started what we call the Center for the Fourth Industrial Revolution in San Francisco in 2017 with a much deeper focus on these technology areas. We work across artificial intelligence and machine learning, data policy, blockchain, IoT and smart cities, etc., etc. In the artificial intelligence team, our work focuses both on macro as well as micro issues. We work on issues like national AI strategy. We also work on specific use cases like the governance of artificial intelligence in healthcare chatbots or the governance of artificial intelligence in facial recognition. So our range of topics is quite broad. We are very excited to partner with the World Alliance of International Financial Centers and NVIDIA on this very pertinent topic. In 2019, the World Economic Forum's financial services team also released a report on the use of AI in financial services. And in this European edition, the spotlight is definitely on the topic of trusted and responsible AI, as has emerged from the recently released AI Act from the European Union as well. So we are very excited to partner with both these key players in that topic, and we are really looking forward to this webinar where we have a great set of panelists. And now we'll be hearing from our next speaker, John, who's the General Manager of Financial Services at NVIDIA. Thank you.
Hello, I'm John Ashley, General Manager for Financial Services and Technology at NVIDIA. Competition, other firms, fintechs, now big tech and big retail, are coming for customers and their data. Many of these firms are digital natives, and they all have a 360-degree view of the customer using data science as part of their DNA. Digitalization alone will not stop these new entrants from taking customers. Data science, and especially AI, will infuse every workload. AI agents will augment our teams in trading and in customer support. AI will assist in product and process automation. It will help us do a better job identifying fraud and money laundering. It will help us understand risk better. All these uses will not just create cost efficiencies. They will also impact customers in fundamental ways. Regulators are rightly responding to these dynamics, and consumers are increasingly concerned with how their data is being used and how algorithms are impacting their lives. Move fast and break things isn't appropriate here. We need these AI agents and systems to be built and operated in a trustworthy way. An integral part of building trustworthy AI systems is being able to explain them. NVIDIA, as a key partner in the AI transformation of our partners and ecosystem, is excited to be here to help move the industry forward. We collaborate across the entire AI lifecycle, from imagining the art of the possible through optimization of production workflows. And building trust into that journey is a key task. On that note, I'd like to thank our co-presenters at the World Economic Forum and the World Alliance of International Financial Centers for joining NVIDIA in this series.
Let me now introduce you to our next guest speaker. I'm very excited to have with us today Jordanka Ivanova from the European Commission's Directorate General for Communications Networks, Content and Technology. Jordanka is a legal and policy officer who has worked on the recent legal proposal on artificial intelligence adopted by the Commission earlier this year on April 21st. Jordanka will give her keynote now, after which we will move over to the panel discussion.
Thank you, Jonna. It's a pleasure to participate in this webinar and present to you the European approach to artificial intelligence in finance. The European Union, with its 27 member states, is one of the largest global integrated and fast-developing markets in financial services, and it has undergone a real transformation in the last decade, especially accelerated with the COVID crisis. Our present and future is digital, and that's why just in the end of the last year, the European Commission adopted an ambitious EU digital finance strategy that aims to enable the financial sector and consumers in Europe embrace all the opportunities offered by the digital revolution, creating strong market players in the lead and some of the most promising and valuable fintech companies emerging now in Europe. Artificial intelligence, covering an umbrella of key, very powerful technologies, is essential for Europe to achieve that objective. We have already seen in practice that the numerous benefits of AI, including in the financial sector, that is among the early adopters, providing consumers with cheaper and better services, allowing companies to innovate with data in ways that were impossible before, to make their internal processes more efficient and to develop new business models, serving also the public interest and helping us to solve some of the big challenges in health, climate change, poverty reduction with better access to finance, fight against crime and fraud, just to mention a few of those. But we also know that all these opportunities come with certain risks because of the specific features of the AI technology, which, if not properly designed and also used, may be opaque, complex, biased, or beyond our human control. As a result, certain applications can endanger our safety and fundamental rights or pose novel risks to security that are also key for the financial sector. That's why in Europe we have opted for a balanced approach with two-pronged objectives. First, to make Europe a leading global hub for excellence in the development and uptake of AI, and second, create the necessary trust and legal framework to address the risks based on our own European values and fundamental rights. The AI package adopted by the Commission on the 21st of April is a key milestone in this journey, with building on more than 3 years of preparatory work and the involvement of thousands of stakeholders. The first deliverable of this package is the Coordinated Plan on AI, which is a review of the 2018 plan and includes now more than 70 concrete actions for the Commission and the EU member states who jointly undertake to turn our ambition into reality and make Europe a leader in world-class excellence in AI. And this includes actions to build the whole ecosystem and partnerships to boost investments and research capacities, including with support with our EU funding programs, as well as the Resilience and Recovery Fund available now to member states. Build the necessary computing infrastructure, platforms, centers of excellence, enable data sharing and create common European data spaces, including for finance data that is key for the development and innovative use of AI. Invest in skills and talent, as well as testing and experimentation facilities and digital innovation hubs across Europe to support businesses and public authorities to experiment and uptake AI applications. And these are only few of those actions that we have already started to work concretely, and we plan to continue on. The second deliverable of this package is the first ever comprehensive proposal for a horizontal legal framework for artificial intelligence, setting out harmonized rules for the development, placement on the market, and use of AI systems across the whole EU. It aims to create the legal certainty for companies and other innovators to invest in and develop AI, and gives them the rule book to do this, while stimulating trust in consumers and users to embrace the AI technology. Trust and human centricity, especially with AI affecting people, is a must and not just nice to have for Europeans. It is important to stress that this proposal, we are not actually regulating the technology as such, but very specific use cases that have been identified as high risk, either because of their increased health and safety risks, or because they have significant fundamental rights implications in high-stake areas such as employment, education, essential services, law enforcement, migration, and judiciary. In the financial sector at present, the proposal has very minimal impact, as there is only one use case covering AI systems used for the assessment of creditworthiness and credit scoring of consumers, where we have already seen that inaccurate and discriminatory applications can cause severe prejudice to consumers. But we have designed the rules as flexible and future-proof, so we'll be able to add more use cases in the future to keep pace with technological and market developments. For all high-risk applications that are roughly 10 to 15% of all those existing now on the market, we propose proportionate requirements that build very much on the work of the high-level expert group on artificial intelligence and its ethical guidelines. And it covers aspects such as risk management, data quality and data governance, transparency and provision of information, documentation and traceability, so we can audit the system and ensure that AI does what it's supposed to do, accuracy, robustness, and cybersecurity, as well as human oversight to ensure that these systems remain tools subject to our control as humans, and they also serve our human-defined objectives. Providers will have to do ex-ante testing and conformity assessments before they can place those systems on the market to demonstrate compliance with the new requirements. They will be also able to put the CE marking, which we hope will become a global mark for trustworthy AI made in Europe, in accordance with our values and rights. For regulated credit institutions, we've ensured that all these procedures and enforcement mechanisms are fully integrated into the existing EU financial supervision and governance system. And ex post, we also have some post-market monitoring obligations placed on both providers and users, taking into account the risks that may arise along the value chain, as well as their corresponding responsibilities and roles. With this proposal, we also stimulate innovation with the concept of regulatory sandboxes, which will allow providers to experiment with AI under the supervision of the competent authorities. And we are also providing additional support measures for small and medium enterprises and startups, who are the backbone of our economy and our fintech industry. Now we have just started negotiations on the proposal with the European Parliament and the Council, and once adopted, there will be 2 years of transitional period for companies to adapt and also integrate into the rules before those new requirements become applicable. In the meantime, we'll be also working with the European supervisory authorities who issue guidance on AI used for other use cases, specific applications in the financial sector, and how the existing financial rules apply to those. To conclude, let me just mention that artificial intelligence is not the only proposal the Commission has been working on, and other relevant initiatives include also our proposal for crypto assets, data governance, digital services, network and information security, and in particular resilience in the financial sector, as well as forthcoming initiatives for creating common European digital identity. All this should lead to a comprehensive EU legal framework that delivers on our commitment to make Europe fit for the digital age. And in this endeavor, we are the first globally, but we are very much looking forward to working with our international partners, since finance as well as AI and the digital technologies know no borders, and we need an international convergence and cooperation on how we regulate these issues globally. Thank you.
Great. Welcome again, everyone. This is the European edition of our global webinar series on AI in finance. Those of you who joined us at the beginning of the webinar, we heard some excellent remarks from the World Alliance on International Financial Centers, from NVIDIA, as well as from the European Union. And we're hearing a number of themes here. We are hearing the balance between regulation and innovation. We're hearing the balance between benefits of AI in finance, as well as trust and the protection of the rights of the end consumers. So in today's panel, we are going to be touching upon both these topics. We have an excellent set of panelists with us. In the interest of time, I'll not be going through their stellar bios. So I'll just quickly tell you who we have on the panel today. We have Sala, who's the Group Chief Data Scientist of SEB AB. We have Joost, who's the Senior Policy Advisor, FinTech and Artificial Intelligence at the Central Bank of Netherlands. We have Claire, who's the CEO of Financial Services Skills Commission in the UK. We have Johan, who's the Partner Relationship Manager at NVIDIA. And we have Badr, who's the President and Co-founder of AI Together. So very wide variety of stakeholders here, and we are looking forward to some interesting perspectives. In the interest of time, I will dive right in. And before I do that, I would encourage the audience to put in your questions into the Q&A box. We'll make sure that we reach to them at the end of the panel and answer them. So I'll start with you, Sala. In your role, you're at the forefront of leveraging data and AI in financial industry. And as we've been hearing, a number of successful use cases exist. So what's the next big frontier that you and your organization is exploring when it comes to AI and deep learning?
Yeah. So thanks for having me in the panel today. I think I'm really looking forward to the discussion. So I would say that there's several things that we're really sort of thinking about. One thing that we've really realized over the years, so I mean, I've had this job for 4 years, and we've been working very hard on implementing kind of responsible and solid AI in the organization. One thing that we're really focusing on is kind of the culture change, to have our employees understand what we're actually trying to do. And when we roll out things, they need to understand why and what they can use them for. So that's kind of the soft skill part that we're focusing on. And then I would say when it comes to more like the technical approach and what kind of things are kind of bubbling, one area that we're very passionate about is data privacy. There are a number of quite interesting technologies that can kind of protect your privacy, so privacy-preserving algorithms, and of course, responsible AI. We quite often come to places where we realize that we need to use a more stupid model because we need to keep the explainability there. And it makes for an interesting discussion with super talented data scientists who want to roll out like deep neural networks. And we're not willing to do that. And then I think another area that sort of has a little bit the same touch is federated learning. So that's an opportunity to not really push data around anymore, but push model parameters around. So we really think that that could be a very good approach for really keeping track of where our clients' data is and trying to minimize the data sharing, but maximize the value of the AI systems that we're sort of working on.
Excellent. Thank you so much, Sarah. And next, I'll go to Joost from the Central Bank of Netherlands. And Joost, so the Dutch Central Bank in the past had released principles on artificial intelligence. What are some of the top areas that you are exploring with respect to AI in financial services?
Yes, thank you, Jayant. Indeed, we've been looking into artificial intelligence, specifically in our responsible use of AI in the financial sector since about 2018. And in 2019, we published our discussion paper featuring what we call safest principles, so principles on soundness, accountability, fairness, ethics, skills, and transparency. And we since use these principles sort of as a foundation to explore further all the relevant aspects for the financial sector. Most of that work we do under our iForum. It's a collaborative forum with financial sector participants, and especially given that AI is such new development, it really helps us to tackle these issues together with the inputs and the practical expertise of the financial sector. And just to give some examples, we recently finished an exploratory study into explainable AI together with a number of Dutch banks. We're also going to look into bias and fairness, as well as ethics, and moving further down the line or further into the future, we might also at some point consider the use of AI in internal models, AI governance, accountability, data governance, and of course, our agenda for further research projects will also depend heavily on how the new European regulation will turn out. So hopefully that gives sort of an overview of what we're looking at.
Excellent, it does. Thank you so much for sharing that. And next I'll go to Claire. And Claire, one of the often discussed topics when it comes to artificial intelligence is the displacement of workforce. But there's also a big gap in the available talent, which can be hard to fill in the short term. What are some of the key efforts that you and your team are doing to bridge this gap?
Thanks, Jayant. Absolutely, the displacement and movement of jobs is huge. Just in the UK alone, in financial services, we're expecting that 20% of workers are at risk of displacement. So just for UK financial services, that's over 200,000 workers. And so clearly, there's not a short-term solution to that when we balance that displacement with the demand for new skills that are coming in. And our members at the Commission, we're a body just looking at skills in financial services. We have 30 members. They've identified AI as one of the top priorities in terms of skills gaps. And we know that CEOs are worried about skills gaps, but not many firms have a strategy in place to address that skills gap in a long-term point of view. Many firms looking at buying those skills in, but with the shortage that's a global shortage, that's not the best option anymore. So we're working with our member firms, supporting them to build in reskilling and developing skills that their workers have. Because many firms have told us that the solution, that the professional they need in the future is someone that has a blend of skills. And Salah mentioned, the sort of some of the skills that we need to understand. And so having technical understanding and financial services expertise and some of the behavioural competencies is where firms are moving towards. And I'll give you an example of one of our members, an insurer, was looking to automate parts of their claims handling process, cost-saving opportunity. But to do that, they brought in some external AI specialists.
And when they started to go through the process of automating various elements, it didn't work very well. It wasn't very smooth. So they quite bravely took a decision to train up some of their claims handlers as automation specialists. It took a long time. It was a good 12, 13 weeks intensive course for these individuals, and that they volunteered to take it on. But at the end of it, the company had these experts who understood the claims handling process, they understood the customer journey, they understood the regulation, and they understood AI. So when they can automate the process, it happened much more smoothly. And so that's some of the processes we're working with our firms to develop. And what we are doing is looking at some of these future skills that are so crucial, and identifying a common understanding of what good looks like, because there's so many definitions of good skills. We want to come up with something for financial services, so we're developing a skills framework that's built by our members for the industry as a whole. But it is a long journey to go. It's not going to be solved overnight.
Thank you for sharing your views. I believe it's one of the key ingredients in the recipe to success. Going on to Johan. Johan, from your experience working in the industry, and you're a member of a number of expert groups, what are some of the top trends you're seeing, and how is the industry aligning efforts to achieve the full potential of AI in financial services?
Yeah, thanks, Jayant. I think the adoption of AI is on a very good way in many dimensions. I will later talk a little bit about the downsides and the problems. But at the moment, we really see a lot of adoption of AI in banks, in insurance companies, in asset and wealth management, capital markets, and also in this supervisory area. So supervisory technology is also emerging trend at the moment, fulfilling the mandate with more tech and more data, which is clearly a good trend, I think. And we see use cases in the entire range from, conversational AI, recommender systems, fraud detection, obviously, anti-money laundering, very important issue, I think, and fraud detection still cost a lot of money to the banks. So it's a really good idea to further automate this and use AI models to support this. And creating new products, also addressing risk issues. So we see AI being used for a number of purposes. So to drive new revenue sources, to create new products, again, to reduce some risk, and also to meet or to comply with regulatory issues like RegTech solutions, and also to have a more personalized experience when serving customers, or just in the back office, to optimize processes, to optimize, let's say, trading, for example, or order book issues in financial markets. So there's a lot of potential and a lot of creativity around here, and people experiment a lot. So some banks we see that are entirely rely on the cloud strategy. Some other banks more focus on the on-premise installation of data center utilization, or they have this hybrid approach. We also see institutions who do both basically in a smart way. And what we also see, and that's so far a little bit underrated, I think, is making use of computing platforms. So AI as a platform in the cloud or on-prem. And this both for the training of models, so training larger, more accurate models, taking more data sources at the same time, also multiple data sources, right? And also for inferencing, so really using these models in production and taking care of an efficient use of these models in production, and also to obviously accelerate things. Just think about real-time issues like fraud detection in real time, or thinking about conversational AI, chatbots. So all this really has to be accelerated. Otherwise, it's not fun for the customer to interact with the bank, right? So we see also that it's going to be easier to introduce AI. Some call it the democratization of AI. So you can basically rent a server somewhere for an hour and you can just test your model. Then you have another server you go into production with a larger scale model. And there are many, many tools that are currently being developed, MLOps tools, for example, that makes life easier for data scientists, right? And also, I think the bank or banks in general have the choice. Do you want to make yourself these new products and introduce that? Or do you want to collaborate with tech startups, for example, who have various special services that help banks also to, to get into this game of AI-driven, data-driven products? So all this sounds very positive, but at the same time, what we also observe is that the more of these AI models hit the road, the more of those models go into production, the more we see people struggle. We see some roadblocks. We see how complex this actually is, because I think there are so many, there's so much knowledge involved from different domains. You need to know something about data, about the business model, about legal implications, right? So we have heard some panelists talk about the skill set and the culture in organizations. So, I mean, transforming organizations to a more data-driven is very hard, I think. And the skill set is really, you need people who need to be educated in these new technologies, but at the same time, they know how the banking business works, for example, and what the legal implications are. Yeah. So, just to summarize, I see a lot of very positive trends, but also new problems coming up and new roadblocks to be removed.
No, thank you for that excellent overview, and I hope that this domino effect that you refer to leans more towards the positive direction as we go forward. So last but not the least, Badru, if you're on the line, Badru was having some connectivity issues earlier. Yes. Okay. Excellent. Yes. So Badru, we've been hearing the perspective from companies. We've been hearing the perspective from Skills Commission, but not to forget the end consumers and end users. What's the role that artificial intelligence can play, especially from the perspective of risk management? And how do we ensure that, as we are talking about AI in finance, the end consumers are very well integrated into all these discussions?
Yes, thank you for the question and the invitation. Before answering this question, I would like to set the context for a better understanding. The crisis of 2008 has been much explained by a lack of confidence between economic agents. It was represented by a liquidity and credit risk. However, the 2008 crisis was not a liquidity or credit crisis. It was actually a data crisis. Banks at that time had not sufficiently developed their AI to assess the relationship between financial assets. And as we know, in time of crisis, the assessment is no longer relevant because the assets are all correlated. As I explained in my book, by the way, if we had adopted augmented risk management, the crisis would never have happened. And today we have considerable opportunity to help finance manage its risks. Data is becoming increasingly central to the industry, and risk management is arguably the most important department in a bank today. Let's take an example, because we are in a European framework. The Credit regulation is an initiative that will have to be submitted to the use of AI that will allow the EU to become a real super regulator. And credit is actually a data set with various information on individual bank loans in the Eurozone. And actually, as the European Union says, credit stands for analytical credit data sets. Thanks to this regulation, Europe will have crucial data for assessing systemic credit risk. AI will therefore have a significant and positive impact on the future of finance. Actually, risk management by AI will give the end user, whether a customer of a bank or a bank itself, the ability to process data to mitigate risks. Actually, finance is just entering a new era. Yesterday, it subjected the economy to loans whose future repayment could be uncertain, and we knew this during the financial crisis in 2008. We experienced this, with a very high risk of default. But today, finance, thanks to artificial intelligence, gives end users the opportunity to contribute to the reduction of risk. We're actually experiencing responsible finance, and this is thanks to artificial intelligence.
Great. Thank you. Thank you for that perspective, Badru. As a quick reminder to the audience, please feel free to send us your questions in the Q&A in the chat. So I think this was a great macro start to our discussion, hearing the broad perspectives from everyone here. But because this is the European edition of our webinar series, no discussion is complete without the discussion on the recent EU regulation and what it means for AI in financial services. As we heard from one of our keynote speakers, according to her, the impact is minimal. However, there have been some concerns raised by some parts of the industry. So I'll start with you, Salah. Some voices in the finance industry are a bit concerned about duplicate regulatory and compliance requirements as a result of the Act, and on the use case of creditworthiness, which is also highlighted by our keynote speaker. What's your take on the Act and the associated compliance requirements?
Yeah, that's a very good question. So I think maybe I can take it from a little bit of a different perspective, from like a Swedish perspective, because I think that there's a number of us, both the industry and governmental organizations, who have kind of created something that I think is a little bit unique, and it's called the AI Agenda for Sweden, and it's a working group where we have sort of over the years, I think there's about 50 different people from many different organizations participating, and we've had sort of a very close connection with the participants in the high-level expert group on AI ethics. They've been joining, and we've had really sort of good discussions about both the white paper that was published last year and many of the other questions as well. Because I think AI is kind of a complicated area, because just the definition of what an AI system is varies even between different papers that the EU has published. So then going to defining what we mean with an AI system and what we don't mean with an AI system becomes even more complex. One of the principles that we've definitely going to keep is that we will always keep humans in the loop, which is very much aligned with kind of the responsible AI guidelines. And we also have, as a bank, SEB has a very close collaboration with researchers in both AI and responsible AI and legal researchers who are sort of looking into these questions from more of a strategic, forward-leaning perspective. And Sweden is a little bit lucky because we have a huge donation of 550 million euros to a program called Wallenberg AI Autonomous Systems and Software Program, with at least like 400 PhDs in AI to be finished before the program closes, and it looks like it's going to continue at least until 2030. So it's really like a long-term investment into understanding the possibilities, but also taking the humanities and society perspective into account, because we know that whatever regulations can try to hinder things, but we need to understand what we want to do and what we don't want to do. Just because it's legal doesn't mean that we want to do it. And just because we really need to understand kind of the ethical aspects of it before we roll out anything. And I think as banks, we already have model governance. We have good procedures for assessing business risk on different models that we're trying to roll out. And it's very much like a question of tweaking those governance bodies and understanding what other skills and what other competences we need to add to those governance committees so that we can actually follow up and understand what it is we're doing. I mean, every bank has their own procedures for seeing to it that we keep our data secure, for seeing to it that we understand what our models are doing, and to keep track of to ensure that not stupid things happen. And I think that we've learned a lot over the years, and I think it's important to understand when you need to be conservative and when you don't. And that's a really interesting area. And the other thing that I wanted to mention, I think it was Jochen who was talking about machine learning operations. I think that's really sort of an important area. I think the sort of I'm sometimes a bit happy that it's a little bit tricky to deploy AI systems in the current sort of technological landscape, because it gives us some time to really make things, to do things in the right way, to spend some time really understanding what ethical values do we want to align to as an organization, what ethical values do we have as a society, and what ethical values do we stand for as EU. So it's a very interesting area because it raises the large questions as well. And it's very much like the human aspect that I think we need to bring in. And I don't really see the regulation doing that, but I guess that's not the work of the law. Thank you.
So thank you for that slightly different but very interesting perspective, Salah. Super important for companies, as you said, irrespective of the regulation that comes in. There's also the aspect of culture and what are the vision and values of the company itself. Staying on the similar vein of thought, coming back to you, Johan, how are financial service firms responding to the EU's act, and what are some of the biggest concerns raised by companies? And you could also share NVIDIA's perspective on this, if you'd like to.
Yeah, thank you. I think we don't really have yet a perspective on this one, but I can report about what we hear in the industry about this topic, and couldn't agree more with Salah. It's a very it touches the big topics, right? So it touches ethics. It touches how much do we want the human in the loop. So these are very fundamental questions, and this is not in the law. So this is a societal question that we have to discuss. And it's a very complex one again. So trustworthy AI, it means a lot to a lot of people, right? So we don't have definitions at the moment. We don't have standards. So I think the EU AI regulation draft raises these issues, but also it's not really a surprise, to be honest, because banks have been using complex models for a long time, and they have very good, at least in theory, very good risk management skills and processes in place. Most of them have, obviously, also in production. So this is not totally new to them, right? But again, trustworthiness, how to encode this, how to implement this into models, it's difficult. And what we are currently supporting here in NVIDIA is an initiative in Gaia-X, and also in some other projects. Gaia-X, by the way, is the European it's a European cloud project. It's about building sovereign ecosystems here in Europe, and I think we can address some of these issues in trustworthy AI with technology again. So there are technologies that address explainability. There are, checks and assessment algorithms for checking fairness and bias of algorithms. We know all of these. And so computing platforms can, to a certain extent, help, and smart algorithms that can, to a certain extent, help to implement explainable, more human-centric AI. So there are, for example, independent algorithmic audits that can be automated that check AI models and help to evaluate them. So we are quicker in seeing there's trouble coming up with a model, there's a concept or model drift, or we can do something like generate synthetic data. So we can use AI to generate synthetic data which can stress an existing AI model of another party, right? So in Gaia-X, we have established a group with many others, including Munich Re and some other participants and banks. There are fintech hubs, and this group is called Financial AI Cluster. And we really want to build their platform, an ecosystem with many participants to support such an algorithmic auditing and AI evaluation system. So at least we can have an efficient platform for those parts of trustworthy and explainable AI that can be automated, digitized. And at the same time, we also learn a lot about these algorithms and we exchange there. So it's also a big platform to exchange ideas, to see what is the best of breed, what is how we can benchmark, and maybe also how we can develop standards. So we partially try to address these challenges with technology.
Excellent. Thank you for sharing that, Johan. And I think, as you said, a lot of tools are being developed, a lot of frameworks are being put out there, including Gaia X as well, which should ideally serve as an enabling platform. But I think this also brings up the issue of international harmonization as more and more of these frameworks emerge. So coming back to you, Badru, before the Act becomes law, much alignment will be needed across Europe. But then there's also the need for international cooperation. So there's not a lot of divergence across multiple geographies, as that could be detrimental to business. What is your perspective on how can we facilitate that international cooperation when it comes to governance of AI in financial services?
Thank you for your question, Jane. So it has been said that actually European definitions underscore like a difficulty of translating principles into enforceable legal text. We will experience this difficulty actually, but we can overcome it. The law is very important, but it will only come into force in 2024. But in the meantime, European players must exchange best practices in terms of developing methods in artificial intelligence. There is a real European challenge on unstructured data, which represent 80% of existing data. This challenge is very relevant because we have the most connected and banked people on Earth. This means we have a huge volume of data available. Indeed, I mean, banks that will be the most advanced in the use of AI or in data processing will take into consideration unstructured data. And actually, they will be the ones that will retain the most customers. And this is very important to strengthen financial support to the economy. But also, the EU should continue its good work by having an AI strategy that would process credit and liquidity data of all financial actors through artificial intelligence to better control systemic risk. And we know that there are more and more papers on this topic, and we know that we don't have the complete truth on that matter. But actually, this is an indirect cooperation of all economic agents. Of course, we have the customers who are feeding artificial intelligence in order to help banks mitigate risks. And we have also the super regulator, the European Union, that could help companies and also the system to mitigate systemic risks. But actually, I think we are on the right track.
Thank you. Thank you for sharing that, Badru. And coming back to you, Joost, the Act highlights that banking regulators will be responsible for supervising AI applications provided or used by credit institutions regulated under the EU Capital Requirements Directive, CRD. How's the central bank responding in this case?
Yeah, thank you, Jayant. And that's a very good question. And there's quite a lot to unpack here, I guess. I think first and foremost, what we want to highlight is that it's quite a good development to have this AI regulatory framework coming. I think like with the GDPR, it's safe to say that Europe is leading by example here. And it's also quite reassuring to us to see that there's quite some overlap with our own safest principles that we developed 2 years ago. Having said that, the current focus of the regulation, of the proposed regulation, seems to be primarily on consumer protection of fundamental rights. And it doesn't seem to cover prudential aspects or financial stability aspects. And at the same time, like you say, there's this connection made in the proposal with the CRD, which is primarily a prudential framework. So it's not yet clear to us, or it remains to be seen how well that works out, that combination. And what further complicates things is that under the proposal, there's quite a lot of different supervisory authorities involved. So in the Netherlands, the Dutch Central Bank, and then for our major banks, the European Central Bank, is the primary supervisor for CRD regulated entities. But given the focus on consumer protection, there's quite an important conduct risk or conduct supervision component. And in the Netherlands, at least, that falls within the remit of the Dutch Financial Markets Authority. And certain other applications in the financial sector, according to this proposal, might also fall partially or wholly within the remit of, for instance, privacy authority, competition authority, etc. And also, it's not yet really clear how the use of creditworthiness assessments will be regulated for non-CRD credit institutions. So, for instance, in the Netherlands, we have insurance companies that extend consumer mortgages. So will that be DNB as well, or will that be the Financial Markets Authority? That's still quite unclear. So there's, all in all, there's quite a few questions that still need to be answered in the weeks and months to come. One of the important ones, I would say, is also since the scope of the proposed regulation now only includes creditworthiness assessments, we still have to see how other potentially high-risk areas in the financial sector and the financial infrastructure, specific financial services like insurance, how they would or should fall in the scope of this regulation, or are perhaps better regulated through a sectoral regulatory framework or in cooperation with European supervisory authorities. So, yeah, I think there's still quite a few questions that need to be worked out. And also, given the involvement of all these different supervisory authorities, an effective and consistent implementation that ensures a fair playing field between, for instance, CRD regulated entities and non-CRD regulated entities, will probably require a concerted effort by both European and national regulators, as well as all the involved supervisory authorities. And I hope it goes without saying that we, at least on our part, are looking into this quite hard now and preparing for a timely implementation.
No, thank you so much. And Joost, I can only imagine, as you're saying, the number of supervisory bodies involved, the number of central banks involved across EU as well. So there's a lot of alignment work for you and your team ahead. But thank you for sharing that perspective. Staying on the regulatory front, but what the main message that has come out is the European value risk-based approach, and also the need for building systems which are responsible. And Claire, we briefly touched upon the need of building multidisciplinary teams, but I think we are talking beyond just getting an ethicist into a team or getting someone who has a broader knowledge of, let's say, psychology of human behavior. We're talking about multidisciplinary skills. So coming back to that discussion on building those medium to long-term skills, can you elaborate a little bit on how you and the organization is working on that?
Absolutely, thank you. And you know, as AI becomes, penetrates throughout the industry, it's touching on every aspect of what happens. So it has to be an approach to embedding these skills and behaviours across the whole of the workforce. And, culture is essential. And I think Jochen mentioned trustworthy AI. It's hard to define trustworthy, but you'll know if you're not trustworthy. If you've got it wrong, it'll be quite obvious. So there's a number of skills that we've identified with our members that are really important. Data analytics is really crucial because having robust, comprehensive, clean data is the basis for any good AI, and there is certainly a skills gap in terms of data analytics. But as we move towards some of the more behaviours and competencies, the inherent human skills, our members have really sat down and said these are the things that are important. So including areas around communication skills, that explainability that people have mentioned, how do we get that? How do we embed that further? Empathy has been identified as a priority skill by our members, which you wouldn't necessarily put at the top of your list, but it has, and our members have really sensed that that's a priority, partly because of the pandemic and supporting customers, but they can see the read across of that behaviour into other areas. But how do you define what good empathy looks like? How do you learn empathy? And so we're working now through our skills framework to define that, to define what competency looks like, to define the proficiency levels of how you can progress and demonstrate those skills and those behaviours. I think the other thing that we're doing is around diversity, and this is something that we're working with the FCA, the regulator in the UK on, and the PRA, because that diversity of thought, that diversity of input helps reduce some of these inherent bias that you can get, etc. So that activity, that diversity inclusion, although it seems far removed, many firms are embracing it because they can see the overall direction that things are going in. And the regulator very much sees the firms being responsible for that, but they want to see good culture, good working practices, and good inclusion.
Excellent, and I totally agree. I wish there was an easier way to define empathy, but I agree, and I foresee the challenges. Thank you for sharing that perspective. We have a number of questions coming in from the audience, so thank you so much for that. We will try and go through some of them. I think there are over 10 questions, so we might not be able to cover all of them. Starting with a question from Damien, and Salah, if I can come to you with this question. What about limited risk systems in finance? That has impact on all companies applying these systems. Major impact or not for companies and regulators? Can you elaborate a little bit more on that?
Yeah, absolutely. And I think this is one of the kind of challenges when it comes to AI systems, because one system might not have a big impact on the business. You need to really see to the full end-to-end process to understand whether you have sort of cross dependencies or you're suddenly sort of connecting things in a way that doesn't work. And that's kind of where the machine learning operations is absolutely crucial to really keep track of both the kind of data pipeline, like what data is going in and how is the data quality, all the data management things that have been mentioned, but also really keeping track of where that limited risk system is implemented and how it connects to the other processes in the organization. So in general, I think that there are some systems that probably don't need to be heavily regulated at all. And I think it's really important to see to it that you have space for innovation. But then when it comes to productionalizing and having end-to-end solutions, I think even limited risk systems might potentially come in under the regulation. And I think that's one of the challenges with the kind of the core definitions in the regulation, that the definition of an AI system is not very precise. So you might have several limited systems that together become an AI system, or somebody buys an AI system and tweaks it. So kind of the understanding of who will be responsible for what part, which is something that we always kind of think about in banking. I think that's going to become increasingly challenging.
Excellent. Thank you for sharing that. Coming to the next question, Christoph Badr, this question is for you. You were mentioning the systemic risk in your earlier talk. So Christoph has requested, can you elaborate on what do you mean by systemic risk in this context?
Yeah, sure. Actually, as we know, systemic risk refers to the crash of an entire system. And as I explained earlier, if we consider the benefits of unaccredited regulation, we will be able to build a super AI model with loans of individual banks. Indeed, this will lead to a system where the European Union or the Eurozone can predict credit crisis. And consequently, we will have a decrease in the probability of default and loss given default.
Okay. I hope that clarifies for Christoph. And then we have another question on, are supervised learning algorithms enough for detecting fraud cases? And Johan, if I can go to you first, and then Salah, if you can quickly build on that. Oh, Salah, or either of you. Let's start with Johan, and then we go to Salah for the question.
Okay, then just quick answer. I think the creating labels for fraud, so that's what is basically what you need for supervised learning is hard, it's costly, it can be erroneous, and maybe there are not so many cases and you don't have the feedback so much about fraud issues. So it's going to be hard. So I think I would plan with the with another approach also to basically leverage the data you have and create synthetically more data to be able to train. So it's like a semi-supervised system in a way. And also, I think it would be very useful to have a human in the loop system, actually. So you have all this vast amount of data, and the algorithm, it might support you to identify what could be fraud, right? What looks like fraud. So in the end, human can understand and see in the context of domain expertise, is it really fraud or not, and then makes the decision. But human cannot go through all the data. So it's a perfect example of collaboration here, a pre-processing in a way, a smart pre-processing. But I'm sure that Salah has also a lot of experience in this area.
Yeah, thanks.
Over to you, Salah.
I agree. Yeah, sorry. I completely agree. I think like the data tends to be very unbalanced. So you have a lot of issues when you're building your fraud detection algorithm. But at the same time, I mean, I think the sort of the perk of doing fraud detection is that your clients will typically tell you that they've been subject to fraud. So you can actually trust the labels in quite good to a large extent. So then it's all about using sort of more potentially funky algorithms and also doing some unsupervised learning to sort of retrain the explainable model that you have in production. And then you use unsupervised learning to find new kind of dynamic settings that you need to set in order to catch new types of behaviors in the fraud space. I mean, anti-money laundering, trying to find sort of suspicious actors who are on purpose using the financial system is much more tricky, because the labels just will not exist, because even if you think you caught something suspicious, the feedback will be very sort of vague in the best case, and worst case you don't really get that feedback. So I think for fraud you can actually have some more self-learning algorithms, but because the clients will tell you typically if they're subject to fraud if they notice it.
Great, thank you so much. And what an excellent set of panelists. Thank you for sharing all your perspectives. Apologies from my side as the moderator and from all of us for the slight delay in the beginning and for running slightly over time, but thank you for staying with us. We have a number of other excellent questions, but in the interest of time, we'll have to close the panel for now. But we'll try and answer them to you, as mentioned earlier. Thank you so much for joining. We will have other editions coming up, including on Africa as well as on Asia. Do join us over there as well. And thank you once again to our panelists. Before we close out, we will have closing remarks from Mr. Arnaud de Bresson, who is the board member and former chairman of the World Alliance for International Financial Centers. Thank you.
Thank you very much. Thank you very much for this very interesting session, and congratulations to all speakers. I have been more than interested to have the crossed views and analysis from the different type of market players, banking sector, central bank, as well as tech platforms and representatives of Brussels authorities all around the table. And congratulations to Jochen and to the organizers, WAIFC and World Economic Forum, to organize this specific sessions. I would make just very short, three comments to try to take the lessons of what we have heard. First, saying that we are in a very big challenge. We have a very big challenge today on IA issues, like on all the new technology issues for the European economy, as well as for the financial markets and the financial sectors. And my view is that it's a really very key issue for Europe as a whole in the global competition. And I do think to China or the United States, with what is happening with the post-COVID period, and the way these countries are very much accelerating the technology organization and the tech developments in the context of the post-crisis. And this is really a reason for which we have to consider this issue on European level and to accelerate. And in my view, we have three priorities that we have heard today. First one is to accelerate the way the market players in all our financial centers are dealing with this issue, both the big market players, banks, insurance companies, asset management companies, to accelerate their developments in the IA issues and to develop databases and better risk control with these databases, like it has been said by Bader, in terms also of analysis of systemic risk and credit risk and all these issues. That's a very concrete priority. And second aspect, in the relationship between the big companies and the fintech, which are developing on a quite rapid pace in all our countries, with very interesting and strong experience and added value on this subject. And I think that the discussion and the exchange between the big companies and the startups and the fintech is really a key issue mostly in AI fields. A second priority is to organize the developments of IA on European level. We have heard Jordanka Ivanova concerning the regulatory issues, which is a very key issue. The European Commission has produced some recommendations, some guidelines, and we all European financial centers have to make their comments. And we have mentioned that in 2 or 3 months a consultation has been launched, and that the Commission is waiting for the contributions next August. So we have to give our comments and suggestions from the industry, and it is very key because we have to really organize the good balance between the regulatory issues and the way to keep and continue to develop the competitiveness and the way the technologies can be developed in Europe. And the question also of the protection of the citizens, like it has been said by Claire Turnley, is a key issue, and the way also we will have to manage the question of the human values and the skills, the education of the skills and the moves of the skills in the companies is very key. So we have to contribute, and as a representative of the financial industry, with Paris Europlace, the French organization, as well as the organization around the table, we will contribute and tell and make our comments. And also concerning the Organization of Europe, the question of the sovereignty concerning this crucial issue of data. And I have been very interesting to hear about Gaia X and the way this European initiative is developing to develop initiatives in the cloud and in all these issues. And I would be more than interested to continue the conversation with Jochen Pappenbrock on this issue. Last but not least, the last point is that in that context, the international dialogue is even more important concerning these issues than in others, because we have key questions about confidence of the consumers, about the human aspects, about the way we have to preserve the integrity for consumers and the citizens. And for this reason, we have to consider that even if in some aspects we are in sort of competition issues, in other aspects we have to organize collectively on a world basis the way these new developments in IA, like in other fields of the technologies developments, must be organized and adapted to be sure that we we manage the risks which we are confronted. So these are, in my view, the three major issues concerning this subject. And WAIFC with Jochen and with Jennifer Reynolds, new chairman, will contribute. And we are more than happy to contribute with the World Economic Forum on these issues with the World Financial Center Alliance, which gave us more than 20 most important financial centers around the world. Thank you very much to you, and congratulations to all the speakers.